Good afternoon, everybody. How are we all doing? Is my microphone okay? Guess what? There's been an update to the video broadcast. So everything went wrong this morning, this afternoon even. So hopefully I've got the levels right, but I might sound a bit different. Hopefully it's not too loud and horrible, but anyway. Afternoon, Mark, Paul, Fletch, Rhodey, Peter, Paul, how are we doing? Paul again. Good, sounds good, excellent. That's what I want to hear. Right, so market's just opened. We've got a break long on the S&P. Nasdaq's looking a bit whippy. The Dow, whoa, Dow's gone. Geez, look at that. Lot of buying coming in today. So, morning, afternoon, Rajiv, Monkey, how are we doing? So we'll come back to that in a minute. This morning was an absolute washout. DAX and FTSE. There was no trades on the DAX this morning. The ranges were not right. So it's a good job, actually, because it just slightly broke short, slightly broke long, back inside the range. We haven't gone anywhere, basically. So there was nothing on the ORB on the DAX this morning. The FTSE, we had two stop outs. We broke short, stopped out, attempted a long, stopped out, broke short, didn't go anywhere. Rubbish. So really crap price action this morning. So we'll see where we go this afternoon. See if we can get some decent ones on this afternoon. I'm going to go through today the new version of ORB. It's now 3.1. I finished it. So I've attempted, the reason I've had all the problems with my microphone is because I've attempted to do the video today for this, to go through all the settings and explain how it works, but my mic went really wrong. So I've spent the last 2 hours trying to get my mic working properly. So I haven't managed to do the video. So I thought I'll run through it quickly in here. Just what the differences are between version 3 and version 3.1. So it's quite radically different. There's a lot of people been asking me for certain features and functionality in the opening range breakout EA, which I don't trade myself, but I've included in the new version to so that people can configure it as they want to. So some people are trading 1 minute ranges, some people are trading pre-market, some people are trading specific 15-minute candles. There's all sorts of people doing all sorts of things with it. So I thought I'd modify it so that you can do what the hell you like with it, which is obviously much easier then, isn't it? Right, so 5-minute ranges are going in. We'll go through that in a second. 1400 at the minute. So we're not going to get a trade on the S&P straight away. The Nasdaq, not either. So these ranges still a bit weird, aren't they? Dow at the moment is sitting at roughly 1600. So we will probably get 10-minute range breaks on these today. So nothing's going to happen on the fives. We'll watch this for the next 30 seconds, but I don't think we're going to get any trades. Mind you, we might do. Wow, look at that rejection. This is selling off hard at the moment. Might be a down day. Morning, afternoon even, Marco, Chris, outro. I'm trading version 3.02. Yeah, cool. Version 3.1 is different, but I'll explain it in a minute. Right. 5-minute ranges are in. So Nasdaq, yeah, too small. Although I wouldn't mind taking a trade on that, to be honest. But anyway, we'll see what happens. So no trades on the 5-minute ranges. Okay, we'll see where it goes. Right, so whizzing over to FX. ADRs at the moment, Aussie dollar, New Zealand dollar, RSIs at the moment. Aussie dollar, New Zealand dollar is sitting up at 75. So I've just got this chart open at the moment. I was just taking a look at it. This is one of the pairs that I'm looking to trade at the moment. So we're coming back up into this propulsion gap at the moment where we've sold out of twice in the last couple of weeks. So potentially we could see some resistance coming in here. We've got a nice propulsion gap, which was the start of that move there that the market started to sell at. We gapped up at the open of the week and then dropped back down again. So this is a good sell area up at 175 ADR, which happens to be the previous week's high. And then we've got this second propulsion gap here. So this is looking pretty good for a short entry. And second entry about 3/4 of an ADR away at the moment. So that's about right for spacing. And then you've got roughly 1 1/4 odd ADR back up into this previous monthly support, which held, and then we broke through with that propulsion, which they sold again into twice. So there's 3 good zones coming up at the moment for shorts, assuming that we're going to continue on a downward trajectory on this one. So I was just watching this on the 4 hour. We're nicely extended on the 4 hour, not quite there on the hourly, but the 4 is looking good. So if you look historically, when we get up into this sort of area, we're looking at some kind of sell-off starting most of the time. Yeah. So obviously it's, it can blow through anything, but this is typically somewhere where we'd be looking for somewhere in the region of an ADR drop from. So good looking potential short opportunity on Aussie New Zealand. I was toying with the idea of taking a trade on this, but I was waiting for some bearish price action to come in. We did get a reversal and we are getting a retest, so I'm going to have a go at that. So Aussie New Zealand taking 1 short. We'll try that and see where we go. So next entry there, you can see my next short is going to be roughly where that weekly resistance is. So that's roughly 3/4 of an ADR away. So if we do get a bounce out of there, I'll take a second and average in for a short off of that. So Aussie New Zealand nicely extended to the upside, 75. So I like it to be bigger. Ideally, above the 80 level is superb, but I'll take that at the moment. I did take a trade on the pound New Zealand for those in the live room this morning. I did get into the pound New Zealand short as well, extended on the 4 hour. So I set a little alert there. I'd rather take a trade at this level, this previous support here, which we kind of started to wick around at, and then we broke through. They used that twice to sell out of this area. So that is a better area, but I decided just to jump in on it today with the plan to scale in back up into these highs. So it might need 2, 3 positions by the time we get up to there. So if it rallies all the way up to there, I'll get out on the next bounce down from there. Obviously, we'd be embedded up on the RSI then. So in a couple of trades there on the pound New Zealand, and obviously just taken the Aussie New Zealand as well. So that's all you've got on RSI. Everything else is flat today. ADRs, the only ADR we've got is a pound New Zealand. Again, that was another trigger for the trade. So we got in on the lower time frame. Obviously, we had the reversal alert go in here. There's reversal alert. And this is the retest going in at the moment. So we just sat and accumulated all morning, really, haven't done anything. So it could well just continue to push up, but I've decided to drop a short on that one and see where we go. There we go, pound New Zealand. And obviously scaling on that one, looking up into propulsion. So again, 3/4 of an ADR is going to take me there. Then roughly 1.5 ADR is up in propulsion. 2 ADR, 3 ADR, propulsion gaps will be filled. So if we manage to get all the way up there before a pullback, it's going to be absolutely exhausted. So that's the plan on that one. We'll see where we go. So that's all we got on FX. I went through all the FX pairs this morning. As Outro's just said, it's dead at the minute. As you can see, the FX markets are flatlined at the moment. For the last week, almost 2 weeks, market's been in shock after the Trump tariff moves. So I think we're waiting at the minute for some kind of confirmation as to what the hell he's going to do next. So the markets are scared to death. Obviously, the dollar is collapsing like crazy because there's, you're mad to buy the dollar at the moment. The economy is falling through the floor. US business is in absolute turmoil. The import-export costs are killing them. It's like, yeah, it's going to be great. No, it's not. It's terrible. So, don't want to buy the dollar at the moment. I was talking about this in the live room this morning, though. This is a psychological thing, the dollar at the minute for me. I've been used to trading for the last sort of 15, 20 years. The dollar is the main currency in the world. Highly likely that's going to shift now. A lot of countries talking about prioritizing trade deals everywhere else but the US at the moment. It's a little bit like going and working for someone for 5 years and then turning around and going, don't want you anymore, pushing you away. And then he goes, oh, actually, could you come back? Because I do actually need you. No, thanks. That's basically how the world feels at the minute. Dollar is not important. We do not need it. We can trade with other people quite successfully, and the vast majority of everything we buy comes from China. So you're just pushing us over to China, which is going to devalue the dollar. So at the minute, psychologically, I'm like, we need to buy the dollar, but realistically, we don't. So at the moment, I'm kind of still cautiously watching, and I think this is what the rest of the market is doing at the moment. Yeah, we've had the Trump move, and now we're like, what do we do next? At the moment, the stock markets were looking like they wanted to rally. There's your got a Dow break on. No trade on the NASDAQ. Look at it. It's all over the place. A lot of volume today, but not a lot of direction, is there? So long on the NASDAQ. So yeah, we'll see what happens. But these stock markets have really got to rally. They want to see some strength coming back into the stock market before I think the markets are going to really put any weight behind buying back into that US dollar. Let's just see if there's any news just come out at the open. Rate cuts below neutral for ECB, so that's negative euro. No real reaction to that. Just seeing if anything coming in on the dollar. Oh, hang on. Trump, America can no longer subsidize Canada. Good luck to the great people of Canada. Elect the man who has the strength and wisdom to cut your taxes in half, increase your military power for free to the highest level in the world. Have your car, steel, aluminium, lumber, energy, and all other businesses quadruple in size with zero tariffs or taxes. If Canada becomes the cherished 51st state of the United States, is this a joke? 51st state of the United States of America. No more artificially drawn line from many years ago. Look how beautiful this landmass would be. Free access to no borders. Sorry, I'm struggling, trying not to cry, laughing at this. Is he serious? I don't even know what to say. Yeah, anyway. You can see what the market thinks of that. It's obviously not batting an eyelid. Wow, I can't believe he says stuff like this. It's nuts, isn't it? Bye-bye, dollar. The Canadian, look at it. He doesn't get it, does he? Let's go and slag off Canada. What happens? The Canadian dollar pops, the US dollar drops. I think this is the first time I've been speechless on stream. Yeah. Elect the man who has the strength and wisdom to cut your taxes in half, increase your military power for free to the highest level in the world, have your car, steel, aluminium, lumber, energy, and all other businesses quadruple in size. I'm sorry, Mr. Trump. Have you seen what you've done to the stock market? Nothing's quadrupling. Everybody's going bust. Hello? What planet is he on? It's almost like he has been overtaken. It's like Men in Black, isn't it? There's some little guy, little alien sitting in his head with levers going, drop this, do that. Someone else is in control of his brain at the moment, isn't it? As if a country the size of Canada is just going to go, yeah, why don't we just join you? On another planet, really is. Anyway, so if the dollar's going to collapse, we might see a pop in the stock markets. You never know. Anyway, but what that does basically is create volatility, and volatility is our friend. It's just you can't predict which way it's going and when, so it doesn't really help us any way, shape or form at the moment, does it? So yeah, anyway, we'll see what happens. So wow. Right, there's your 15-minute ranges in on the S&P. No trades taken. Ranges are slightly too tight, so we'll be taking a 30-minute on that. So there's your 30-minute range as it stands now. So I'll be taking a 30-minute break in 15 minutes. Same with the NASDAQ. Not short, not too far short. So I'll be taking a 30-minute range break there. But this thing could go anywhere today, obviously. He's obviously woken up. I think he's got some meds or something, isn't he, obviously? That was at 1:37. How did I miss that? Because I was mucking about on my microphone. Anyway, right, there we go. I covered all this morning in the live room for the London session. So I went through all the FX pairs. At the moment, obviously, you can see what the market is doing. Absolutely nothing, because it's waiting for Trump to say something. What we're getting at the moment is basically consolidation until we have any kind of clue whether we should be buying or selling anything. Yeah. So that will happen at some point, but it's going to be a trigger. There's going to be a trigger that Trump is going to say something to either undo the tariffs or add more tariffs. Yeah. Adding more tariffs does this. Listen, Mr. Trump, adding more tariffs does this to the US dollar, which makes your economy contract, which makes everybody go elsewhere, which makes you contract further. And eventually it's called bankruptcy. But anyway, that's what tariffs are doing. Removing tariffs does this. Yeah, you've seen it. You've done it. Remember, Mr. Trump, what you did was you put tariffs on and then you took tariffs off. You put tariffs on and you took tariffs off. Yeah, get it now? Anyway, so at the minute the market is stuck, sitting there waiting for something to happen because we just don't know what to do with any currency. So like I said this morning, the best way at the moment, I think, to trade is to go with the flow as much as possible. Yeah. So if something is popping at the moment, try and go with the pop, because it's just going to grind away wherever it's going until we get some directional change. So we'll have to see what happens. But as you know, with oil and all this sort of stuff, yeah, I mean, come on, wake up, man. It's great. I would short the crap out of oil. I said this morning, $50 a barrel within the next couple of months, absolutely on the table. If he carries on with this, there's no reason we won't be down at $50 a barrel. It won't go much below that because they can't sustain oil manufacturing at that price. But if we get to $50 a barrel, you know what to do. Carry on buying it because it can only go up. If it goes below $50 a barrel, we haven't got an oil industry anymore. Where's a lot of that come from? Oh, yeah, the US. Anyway, so we'll see what happens. But so long on the Dow so far, but not a lot of movement beyond that initial sort of 15-minute flurry that we've just had come in. So we'll see where we go. This could go anywhere today. Could be one of those days today. FX seems dead yet. What have you got your range sizes set to? I'm on 0.2 and 0.4. Yeah, 0.2 and 0.4 is what I'm using at the moment with ORB. I've kind of gone back to, no, sorry, I'm using 0.15s. Yeah, 0.15 at the moment. I'm still on, it's a mix. Oh, hello, someone's just said something. We just had a big volume spike come in there. Usually about 10, 20-second delay on the news. That might have just been a big order come in, but see if something just came in there. So yeah, I'm using a mix at the moment, just trying to really gauge where we should be, because at the minute, obviously, no back testing is going to be relative to what we're doing now. It's just not relevant, rather, to what we're doing now. So I've got 0.15 running on the S&P. I've got 0.2 running on the Dow. The NASDAQ, I think, is 0.5. And that's 0.2 on that. The FTSE, I'm running 0.2. And the DAX, I'm running 0.2 as well. So back to normal on most of them, apart from the S&P. So with that one, it's running on 0.15. Just to get a bit of deviation in, because obviously what we're seeing at the moment is a lot of confluence across these instruments. They are very much doing exactly the same thing at the moment. So just trying to put a bit of diversification in, really. Very difficult to know what to do with it. Ron, is he okay? It's not helping the stock markets. Nope. Stock markets are in turmoil, basically, aren't they? So if we look at the S&P 500, we are recovering. So obviously this is the tariffs. This is the removal of, or rather the pause, the 90-day tariff pause. We are coming back to gap fill. So we've still got 175% of the 10-day ADR to get back up to that gap fill. But if we are in a bear market, I suspect as soon as we've done that, you'll be back down. So it's really difficult to call whether we're going bull or bear. Obviously, it looks pretty bloody obvious to me. If you go back and look at the start of the last bear market that we had, it all started with a swift collapse. Yeah, so these are normal daily candles, obviously. Yeah. So what you get when you start going into a bear market is you get an acceleration in volume. ADR spikes through the roof. Obviously, if you're looking at the VIX, volatility index is going to go up, and you start with a big drop that basically wipes out usually a good couple of months worth of market movement. The market then pulls back to rectify inefficiencies, and then the sell cycle starts. Yeah. And then eventually you'll bottom out and pop again. Yeah. If you look at the size of the bear market start that we had here, which was back in 2022, which is when we started all the interest rate rallies and everything, that was 6,000. We've done 13,500. Yeah. This is way bigger than the last bear market that we went into. Yeah. So this looks like it could be absolutely catastrophic for the stock markets. Unless something changes, and this is the thing I've been saying about since this started. We've never seen this before. No one on the planet right now can tell you what's going to happen next, because we've never seen a move this size. The only thing he said was, I have just created the biggest bullish move in the stock markets we've ever had, which is correct. That 6.5% rally was bigger than we've ever seen before. But don't forget, you made it drop by over 10% in 3 days. Yeah, you forgot to mention that bit, didn't you, Mr. Trump? Just mentioned the one bit that's good, but it's not good, is it? What it is a retracement on a bear market that you've just created. So whether we're going to get back to gap fill or not, we'll have to wait and see. It doesn't look like the market's really got the legs this morning either, does it? Putting back, looks like I'm going to stop out on this. This is an absolute whipsaw nightmare at the moment. This thing is just terrible. It's just as whippy as it gets. Not like you can do. Going to stop out on that one by the looks of things. 30-minute range is going to go in 5 minutes time. So we'll see if we can crack some 30-minute ranges on the NASDAQ and the S&P. These should be working in portfolio mode. Yeah. Because I think we're going to stop out on this one. Narcissist, yeah. He's a narcissist surrounded by a load of narcissists, which is quite narcissistic, isn't it? Trade executed on the US 30. Cool. Yeah, you're in that one. You're going to regret that in a minute, Outro. He's already done the damage. Yeah, I think he has. I think he's stuffed it. I don't think America's going to recover from this. From a trade perspective, anyway. They can do what they like internally, but from a trade perspective, us in the UK, Europe, we're all looking to China now for trade. We're not interested. We're looking at close border trade and trading with the largest exporter on the planet, China. Why would we come to the US? We just get it there. Yeah. We've been nice. You've been nice. Now you're being nasty. We're not really interested in talking to you. That's basically what most countries are saying. So, it's like running a business and phoning up all your customers and swearing at them and not expecting them to go to another company. What's going to happen, isn't it? Just watching this to see if I stop out. And then we'll look at the new version of the EA. Just want to see if that survives, because this is basically almost a 61.8 pullback. So I'm just seeing if this is going to be a deep pullback on a bull move. I suspect it's just going to rotate. We could even collapse back the other way. Yeah, this is absolute whipsaw again today. These markets are not suited for breakout trading at the moment. Gone back into really nasty contracted ranges. But just have to ride them, unfortunately. Did you get any trade on the FTSE or the DAX? Just on the FTSE. Afternoon, David. I have a gap on my MT5 in the NAS from last week. I'm not sure if that will get filled. One. So the NAS gap is there within ADR today, so easily achievable today. But yeah, maybe not. The thing you find with gaps is obviously gaps tend to get filled. You know, we know gaps get filled. They are very, very, very common for gaps to get filled. The trouble is, at the moment, there are so many gaps, and the gaps are caused by so many different things. So it's very hard. This is the gappiest market I've ever seen, actually. If you look at previous, go onto an hourly chart and look at the DAX from weeks and weeks and weeks ago, you don't get this many gaps usually. But gaps get filled. So the argument there is for a 200% ADR move to the downside to fill that gap. But if we can get that filled, brilliant, because that opens up the downside move, doesn't it, for the bear market, which is what most of us are expecting. This is where the market was trading before Trump's announcement. So unfinished business could well be done. Yeah, it doesn't have to get to the gap. Everyone that was long here and buying into Friday there that got put underwater, they will get out here at a loss rather than try and hope to get back to there. So it could well be that we just push back to sort of this area, and this is where we collapse from. Not necessarily going to do that gap. There's more likelihood of doing that downside gap at the moment, I think. But it's just a mess, isn't it? Look at it. It's just a mess. The markets are scared to death. So stopped out on the Dow. Selling off quite hard here. So going to take a 30-minute range break on these. Kind of like it to pull back before we get into these, to be honest, because there's a danger of just going into this horrible rotation that we're seeing at the moment. So we've got 1 minute left on these candles. They don't like that, do they? I mean, seriously, it's like having somebody running the biggest biggest company on the planet, a bit like Elon Musk, turning around and suddenly doing stupid things like playing with forks at the dinner table and making models and things. You'd be thinking, are you okay? Like, I know, can we have Canada? Can we have it? What about Greenland? Can we have Greenland as well? Yeah, I tell you what, while we're at it, why don't we get the UK and we'll drag it over with a big chain and lock it onto the side of the US, and we'll have that as well. And he's being totally serious about it. Mad. Right, 2 minutes, 2 seconds. So there's your 30-minute ranges. So 30-minute ranges are on everywhere. Short S&P straight away. Short NASDAQ, I'd imagine, straight away as well. So this is a dodgy one because I would expect a pullback on this rather than a complete collapse, but the market is not stopping. So short NAS, short S&P. See if we can recoup some of this loss from this morning and from on Friday. So looking at targets to the downside, my first target partial is down here. So that work out 550. So NASDAQ, it's really close, isn't it? So I'm just going to move partial targets up on the NASDAQ. S&P, I'm going to do the same. This is basically, these targets will just recoup this morning's losses and put some profit in the bank if we go there. Dow hasn't quite triggered. That was close. Very close. So not quite triggered on the Dow yet. But Dow, again, I'm just going to move the partial up slightly so that if we close down somewhere like this and then we bounce, at least I'm going to take 75% of the profit off, which will put me back in profit for the day. But loss recovery exercise at the moment. See where we go. Right, so just going to quickly run through the changes in ORB version 3.1. Again, I'm going to do the video on it this week. I keep trying to do this video and I can't quite get it done. I just only realized I got this. This is a demo. I've just got this running on at the moment, just testing. So I'm going to go through the differences in it. So if you've got ORB, I'm just going to quickly run through here what the changes are, just so you know, but I will be doing a proper video on it before I push it out as an update. Afternoon, FTNet. Literally Elon Musk, yeah. Going mad, isn't he? So this is version 3.1. So I've gone up basically to 3.1 because there's so many differences in this compared to 3.02, which is the current release. I've decided to just go up a number basically because it is quite different. So there's three main differences with version 3.1, which is basically because of stuff that people have asked for. So first thing people have asked for is I have it automatically set at the moment, the EA, to switch to the 5-minute time frame, because that is the time frame that all my testing and all my trading is done on with opening range breakout. But there are people out there, especially trading futures, that like to trade 1-minute charts. So what I've done is I have a time frame to run the EA on input now. Okay, so it's defaulted to 5 minutes. But if you want to trade 1-minute charts, you can set that to 1 minute. And as it says there, it will auto switch to this. So when you apply the EA to the chart, it will at candle close. If you are not on the time frame that's in the inputs, it will switch over. So when the timer runs out on this 5-minute candle, you'll see this will switch straight over to 1-minute charts. So you've got the option now to trade any time frame you want to. So people are also trading 15-minute charts. Okay, so some people are trading on 15 and they're trading 15-minute ranges. So it's very similar to me trading the third range break, which is the 15-minute ORB, and the 30-minute ORB. Yeah, so those two are equivalent to 15-minute charts. Yeah, so what I've done, because I've done this input here, obviously now I can't say the 5-minute, 10-minute, 15-minute, and 30-minute ranges. Because if you're trading on the 1-minute chart, I can select it, this is not going to be trading a 5-minute range, is it? So it's switched over to 1-bar range, 2-bar range, 3-bar range, and 6-bar range. So what it will do, let me just switch over to the 1-minute chart, is when the time is achieved that you enter into here, it will look back one candlestick. So let me just zoom in a little bit more. It's obviously pretty obvious what it does, but I will explain. So the 1-bar range at 1635, let's say this is the 1635 candle on the 1-minute chart, it will trade the 1-bar range. So it will look at that last candle, yeah, and it would have tried to go long on it, yeah. This is a 2-bar range. So if you set this to 1635, when we hit 1635, it will look at the last 2 bars, which is that high and that low. In fact, that is obviously within that high, so it would look at that entire range of those 2 candlesticks. Yeah. If you set this one to 1635, yeah, 5 minutes after the open, it will trade a 3-bar range. So all that's going to do is trade, assuming that is the 1635 candle, it's going to trade that bar, and that bar. So that would become your 3-bar range when that candle opens, okay? And then we've got the option to trade a 6-bar range. So if you set that one to 1635 at 5 minutes after the open, it will trade 6 bars. So if that was your 1635 candle, you'll have 1, 2, 3, 4, 5, 6. So the range it would trade would be that range from that high to that low, because that's 1, 2, 3, 4, 5, 6 candles before our open. Yeah. So that's basically what the input changes are. So what it means is if you want to, for example, trade the 15-minute pre-market range, yeah, you would go on to a 5-minute chart or a 15-minute chart, and you could say, I want to trade the 1-bar range at 1630 at the open. And what it will do is it will trade the 15-minute candle, 1 bar, before the open on the 15-minute time frame. Yeah. So if that's, let's find the open. So it is there, isn't it? Yeah. So that's the open. I've set it at 1630, that candle there. So it would trade a break of that 15-minute range, because that is the 15-minute time frame. Yeah. So you've got the complete control over what you trade and what you don't. Anything you don't want to trade, you just set it to 0. So if you want to use the 5-minute chart and trade a 15-minute pre-market range, you can set that to 1630, and that will trade 3 bars before the open on the 5-minute chart. If you set that to 15, it will trade 45-minute range before the open. If you set it to 30, it will trade the 1.5-hour range before the open. So all we're doing is saying, look back, 3 bars, 2 bars, 1 bar, or 6 bars. So it gives you much more control over what you want to trade, basically. So anybody that, some people have asked me, so another example, some people have said to me, I want to trade the 30-minute candle, the first 30-minute candle after the open, and I want to trade the initial balance, which is the 60-minute candle, which is the 1 hour of price action. So to do that, you would set it to 30 minutes, and at 1700 for me, yeah, and 1730, what that will do is on a 30-minute chart, it will trade the first 30 minutes of price action, which is your TPO, your time price opportunity first 30-minute candle, and it will trade the 60-minute, which is the high of the 30-minute, the low of the second 30-minute candle. That is your initial balance, which is the first 1 hour of trading. So if you want to take a breakout either long or short of the first 1 hour of trading, you can now do that, because what you can do is you can set it to a 30-minute chart and say, try and get me on a breakout of the 30-minute range if it's bigger than 20%. If not, try and get me on a break of the 1 hour candle if it's more than 20%. Yeah. So you've got complete versatility over what time frame the EA operates on and how many bars back you look. I've got it set to 1, 2, 3, and 6 because that will pretty much handle any range you can think of. So it does pretty much anything, doesn't it? Yeah. If you wanted to have, you can have multiple versions of the EA running with different magic numbers. And obviously, you could have one that trades the 30-minute chart, which trades the 30-minute first range and the hourly first range. So exactly as it's set up there, it will trade the TPO, the first 30 minutes, and it will trade the initial balance, which is the first 60 minutes of trading. And then on another chart, you could set it up to trade on the 5-minute time frame and trade the standard ORB, which is trading the first 5 minutes of price action, the first 10 minutes, the first 15 minutes. And we're just looking for a range within that time period that meets our criteria. But you might want to trade the pre-market. So you could set it to 1630. Yeah, and what it will do is it will trade 3 bars before at 1630. So it'll look at the 15-minute pre-market range and see if it can take a pre-market trade for you. If not, have a look at the 5-minute and the 10-minute. Yeah, however you want to work it. It's completely flexible now. So those are the new inputs that you've got. and the new functionality. So it works exactly the same way. If you just set this to default, i.e. hit the reset button, this is the opening range breakout strategy that I trade. It's a 5-minute chart, and I'm trading the first 5, 10, 15 minutes and 30 minutes of price action. So that's exactly what it used to do, except you can now configure it differently. Risk hasn't changed. Starting balance is now just for display purposes only. So it doesn't go into the loss recovery mechanism anymore. It's just display only. We have also got now maximum allowed lot size and maximum amount of money risk. So if you're trading with lots, so for example, if you're using 1.5 lots to trade with, you can set it so that it's got a maximum of 20 lots. It will take maximum if it's using lot multiplication. So you can basically set an upper limit if you're using lots. If you're using monetary risk, so if you're risking 1% of your account, or if you're risking $100 per trade, for example, the maximum allowed money risk will kick in. So that says there in brackets if you're using percent or money risk. So if you set that to 300, if you're using the loss recovery system, it will start with $100 and it will keep incrementing until it's got your loss back, until it gets to 300, and that will be the cap. So it will stay there and it will keep trading at that level of 300 until it's recovered your loss, and then it will revert back to normal if it needs to. Yeah, so it's got upper max limits set now for lots and for monetary risk. Everything else in there is pretty much the same. The ADR period has moved up here. So this ADR input for calculations used to be down in stops and targets. It's just moved up there because it's related to obviously all of this stuff as well. So loss recovery settings has now got its own section. So the old loss recovery system, I didn't explain exactly how it all worked, but it was a complicated mix of starting balance, current balance, yesterday's balance, how we've done today on each individual instrument. It was complex. Okay, I'm going to do a proper video on how this loss recovery system works. In a nutshell, what it does is you've got multiple options. So first option obviously is pretty straightforward. Use a loss recovery system to increment risk. If you set that to false, it will not use a loss recovery system. Simple as that. It will just use whatever your risk is that you enter there. If you do use a loss recovery system, it will multiply your risk by a multiplier. So if you risk $100, okay, and it takes a trade and it stops out, if you have that set to 1.2, your next risk will be $120. If that one stops out, it will be 120 times 1.2, which is some kind of math thing I can't do in my head. So yeah, it just goes up and up and up, okay, until it hits the max risk, okay, whatever that may be for whatever you've put in. You can now also have what I call portfolio mode, which is loss recovery based on any symbol traded by the EA. So jumping back over here, for example. So this morning, I've got $1,000 worth of loss on the DAX. Sorry, not on the DAX this morning, on the FTSE. Okay, and we've taken a loss on the DOW this afternoon as well. So there's 3 losses in there. So if you have the loss recovery system set to portfolio mode, it will take into account the last trade the EA took, whether it was a profit or a loss. So in this case, as you can see, we haven't taken any trades on the S&P today yet, but it's already in loss recovery mode because we've taken loss trades, 421, on the DOW. So it's saying, okay, on the S&P, will try and recover your DOW loss for you. If you set this to false, what it will do is it will not use loss recovery mode, and it will go, the last trade that I made on the S&P was X. Therefore, I will risk X based on how we got on with the S&P. So the last trade on the S&P was 341 profit. That hasn't updated yet because it's got trades in place already. If it hadn't taken any trades, that would adjust. Okay, so it will adjust correctly when you're not doing it halfway through the day. But anyway, so it will basically adjust based on portfolio or not. So at the moment, the current version works only on instrument. So it tries to recover its own loss. The problem with that is if you've got losses that have been achieved in the morning on other instruments, in the afternoon, you might want to recover those losses by trying to not over trade, but increase your risk on the instruments that you're trading in the afternoon. Yeah. So that's basically how the loss recovery system works. The way that it works is it doesn't use starting balance at all anymore. Okay. It just uses your previous day's profit and your current day's profit. So the algorithm in a nutshell is, if yesterday was a loss, I'm going to try and recover that loss by using slight incremental lot sizing, yeah, or incremental risk. If yesterday was a profit and today is either no trades taken or is a profit as well, we will reset our risk back to the start, because we don't want to over leverage if we're having a good day. We just want to trade as normal. If, however, yesterday was a loss and this morning is a loss, we are going to increment our risk and we are going to stay at the same risk until we've recovered yesterday's loss and today's loss. Okay. So what it does is day by day, it looks at how you did yesterday and how you've done today. And it incrementally increases your risk if there is a loss to recover. If there isn't a loss to recover, it will just trade normally. Okay. So I'm going to do a little video on exactly the logic to explain exactly how it works. But you can adjust this as you go as well. So if you decide that you don't want to recover yesterday's loss, because the way that the other version worked was it used your starting balance as well. And if it was below the starting balance, it would automatically get aggressive, which was okay. But what I found in some of the back tests that I did on the new system that I was building, occasionally, if you start on a bad run, i.e. the first 5 or 6 trades that you take or the EA takes are losers, and you suddenly go down, it will keep risking high risk until it's got you back to that starting balance. The problem with that is it exponentially can increase your losses, which we don't want to do. So what it's doing is it's just looking at yesterday and today. If yesterday was bad and today we get back to, say, $200 profit and we haven't recovered the previous day, tomorrow it will look at the $200 profit we've made today and go, well, yesterday we actually made money. So we're not going to keep trying to recover that. So we're not going to go, oh, we're 1,800 down. We just take that loss. Okay. The way it was working before was, if the balance is low, it means we've taken a loss the day before it. I'll keep chasing it. And if you keep chasing losses and it goes wrong, you will die very, very quickly. Yeah. So it's still aggressive in the way that it will try to recover the losses, but it's not as aggressive as it could be. Or, some people think it should be, but you can adjust it by using the lot multiplier. So if you want to get super aggressive with it, you can do. Yeah. You could go to 1.5 and that will start putting 50% onto your risk every time you take a trade. But as you know, in situations like this, where we're getting these horrible, choppy, rangy markets, you can very, very quickly get to a massive lot size, which means you just can't get the leverage on. So you've got to be very, very careful with it. It's not a martingale system. It's never designed to be a martingale system. It's designed to be a gradual lot increment system to recover losses. So it's designed, if you're having a bad run, to try and get you back as close as possible to break even. It's not trying to recover all the losses. It's trading. We're going to take losses. But what we're going to try and do is take a little bit less loss than normal. Yeah. So that's all that's designed to do. So somewhere around the 1.15, 1.2, 1.1, that's okay. Anything above 1.2, if you go and back test it, you will see that it can get aggressive very quick. You will see the equity curve, if you're testing sort of higher increments of 1.2 or higher, you'll see that equity curve grow very quick. But you will also see that suddenly happen, because when it starts to go down, you are taking so much risk that every loss is giving, it's like a Trump, basically. It's giving back everything you've made over the last 2 decades, Trump. Yeah. So be careful with it, back test with it. But that's basically how it works. So those are the differences between version 3.1 and version 3. So the main thing is this: you now have the flexibility to trade any time frame you want to. Yeah. It's going to open up also for people that want to trade Forex. So many people have said to me, I want to trade the open in Forex. And I keep saying there is no open in Forex. I don't care what ICT says. The banks do not open at 8 o'clock and start trading. The banks are 24/7 electronic trading. Yes, we get more volume in the mornings when the markets get going, but there is no time the markets get going. They don't start work at 8 o'clock. They sit at their desk at 8 o'clock and they look at what they've got to do and they will start to execute orders. They don't go bang like the stock markets do. That's the whole purpose of this strategy. So people that are using this in FX, but they're restricted. So now you are unrestricted. So if you want to use this as a breakout EA on Forex markets, you could use either the 15 or the 30 or the hourly. And you can say, I want to take a breakout on hourly time frame at 8 a.m. And then I want you to try at 8:30 a.m. or you'd have to have it on a 30-minute chart or whatever you want to do. But you can use it basically to wait for the market to wake up. That's the whole purpose of this. The reason we use this minimum range is to identify that they're alive. Yeah. So if the opening range is this, or the opening of the FX market is this, it's crap. You don't want to trade it. It's not going anywhere. If the open suddenly goes pop, you can monitor that. Yeah. So you could set it on the hourly and say, I want you to check after. I mean, the way to do this would be, so for me, 8 a.m. is 10. So I would set it at 11. And then I would set it at 12. Yeah. And then I would, for a 6-hour range, I wouldn't use it, to be honest. But so what that would do is at 8 a.m., I would say, have a look at the last hour's worth of trading in Asia. And if we've had a load of volume come in, let's see if we can take a break out of it. So let's see if London wakes up and goes for it. If it does, let's get on it. If at 8 o'clock in the morning, London hasn't, or Asia hasn't done much, let's monitor what London does at the open. If London doesn't do much at the open, we'll wait and we'll look at the next hour. When London does decide to get going, we'll take a break of that. Yeah, and assume that we're going to pull back and continue for the day. Or it's a false breakout to the upside and we're going to reverse. Yeah, that's all we're doing is we're looking for momentum. We're looking for volume. And you can measure that as a percentage of the average daily range of movement because we've got no centralized volume. So it's really flexible now. Yeah, so hopefully for those people that are using CFDs, that will be useful. DAX is breaking down. Stopped out on something. DOW. So stopped out, double stop out on DOW. It's just whip. Look at it. Shocking. So not going to take another short on the DOW. That one's done. But we've got the S&P and the NASDAQ on. So hopefully one of those two will kick in. Did you find a fix for when the EA is in portfolio mode and looks at the last trade and then close time was the same? No, I haven't looked at that yet. No. No. That was on my list of to-dos. But because it works now, when I had that, I wasn't using the previous day's profit. So now that we're using the previous day's profit, it doesn't matter so much what order yesterday's trades were in because we're taking a total of yesterday's profit. So I'm not really interested in what the last trade was as much. I'm interested in what yesterday happened and what's happened so far this morning. If we're chasing yesterday's loss and we're chasing loss from this morning, we need to try and up the game a bit. Yeah. God, this is such a nightmare, this market at the minute. It's absolute chop. Look at it. It's a range trader's dream. There's people that trade ranges at the moment, absolutely killing it. Just total chop. Where's all the volume gone? Where's all the direction gone? It's almost like you just want to stop and go, right, I'm just going to wait until Trump's gone in 4 years and start trading then because he's just ruined this. He's ruined the markets. It's just not happening, is it? There's just no volume breakouts at all. It's just like chop, 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 chop. You need an anti-ORB. You need to be trading the opposite of ORB at the moment. I say that now, and then all of a sudden it will collapse. and it will go 3 ADR to the downside, and we'll go, thank you very much. You've got to sit through this crap, unfortunately. And this is partly why this system's here. So, for example, now look, we're up to 554 from the original 330 risk. Yeah, because we've had loss. We're incrementing, we're getting bigger. So for us to recoup a loss now is literally a 3R. So 1 3R move, done. Back to break even. That's all we're looking for. Very, very, very quick to recover the losses when the moves start. But because we don't know when the moves are starting, we have to just wait for that move to kick in, basically, which unfortunately is when you sit through this crap. And this is the thing with the loss recovery system. This isn't going to be for everybody because, and this is why I've also put it in, because some people have said, I don't want it to do this. I want to be in control of my risk. So people have said, and quite rightly, I don't want this thing automatically managing my risk for me. So that's why you've got this off button now. Yeah. So if you want to manage risk manually and use your own loss recovery system, so you decide when to increment or decrease your risk, you can do that. So set that to false. If you're risking 1% of your account, that's fine. If you take 3 trades and they go wrong, you might say, right, I want 1.3% now because I've had 3 losing trades in a row, so I want to get in a bit more aggressive. And I'll leave it at 1.3 until I can see that I've recovered 80% of that loss. And then I will go back to 1. You can do that. Yeah. The way that mine works is the way that I think it should work, because this is the way that I tend to try and recover loss. Not necessarily the right way to do it, and not what everybody wants to do. So the option is now there, basically. So if this breaks short today on these two, that loss will be recovered very, very quickly, and we will chip into yesterday's loss. And then tomorrow we will just reset. If, this could just easily just go like that, and we're going to sit in a rotation all day, and that's the end of it. In which case then we're going to have taken a loss today, and our risk will be that tomorrow morning. So if you look at the DAX, which will be the next thing traded, and the FTSE, yeah. So on the DAX, you can see the DAX is now set. The DAX, remember, has not taken a trade today. The DAX is set to trade at 554 now, because it's monitoring the losses we've made in the US session and saying, right, I've got to try and recover the US for the US guys yesterday. Yeah. The FTSE is sitting there saying, I'm going to trade at 348 because my last loss was 302, because portfolio mode is set to false. So it's only trying to recover its losses. It's not worried about what's going on the other one. So if I set that to true, it will then go, okay, tomorrow morning, I'm going to kick off. And when this candle closes, it will all update. But I'm going to do the same as the DAX. I'm going to get aggressive to try and recover some of the losses from yesterday's US session. So again, this is why you can control it like this, because you might want to say, I'll go aggressive on the DAX this morning and try and recover some losses, but I don't want to get that aggressive. So on the FTSE, I'm going to stick with normal. Yeah, so again, you can completely configure it to either use portfolio or not use portfolio on each individual instrument. So you can be really aggressive all the time, or only aggressive on the stuff that hasn't worked, i.e. the DAX isn't working at the moment, so get aggressive on that. But the FTSE's had 3 clean breaks, so just keep doing what it's doing. Yeah, you can change it and trade it in any way you like. Obviously, for back testing, that opens up a can of worms, because it's a hard thing to back test. You can do it in MT5. How much I trust it, I don't know. But you're better off using it personally, I think, as a manual tool. Got a nice break starting to the downside. There we go. So that's it. So I've pretty much done the video there in a certain aspect, but obviously I will get a proper one done when I get a second, when my mic's working. Pound US dollars broken to the upside. ADR hit. So this is obviously US dollar weakness that we're seeing coming in. Everything breaking to the upside against the US dollar. US dollar obviously coming down because Trump's decided he's going to take over Canada. So reverse alert just going on US dollar yen. That's off the weekly highs. There's your reversal alert. So bears in control. So pull back shorts on that. You know, what I said this morning in the live room about not having any faith in buying the US dollar, it's just kind of hammers it home, doesn't it? It's not a case of I'm expecting something positive to come out of his mouth. Nothing positive has come out of his mouth since he started, is it? So you have to assume that you're going to carry on in the same way. We are basically up in fear mode, though. We were extreme fear, and now we're just scared. So we were really scared. Now we're a little bit scared. You just can't make head nor tail of anything at the moment, can you? So nice clean breakdown on the DAX on the US session there. So we're back down at the 30-minute range. So see if we can get push down today on those. So that's just a grand if I take it off down there. So I'm going to leave it running. See if I can get about a 2R out of each, which will basically get all back the loss from today, and then hopefully the runners will start to chip into yesterday's. Get some of that back, but tough at the minute. Anybody got any questions on any of that? Did it all make sense? Hopefully. DAX, nice breakdown on the DAX. So there's the gap fill done on the DAX. Yeah, so there you go. So the gap fill today on the DAX complete. Look. So next target, as I say, if this is a bear market, that inefficiency is done. That's your next target to the downside. Look. So how quickly can we get down there? So all this is a pullback on the bear move. It's deep, but it is potentially just market structure short in the next bear leg down. So we'll see what happens. But this is what people are expecting and forecasting, is us to go back into another bear market. So 6 to 12 months of that. We will see. Whoop, one. Okay, pull back up inside the range again. It's absolute chop fest, isn't it? Wicks. The 1 minute traders at the moment on prop must be absolutely loving it. They'd be killing it, wouldn't they? Literally, buy every high, buy every low, sell every high. I haven't watched Top Step TV for a while, but I should imagine there's some people on there making a lot of money at the moment. So just wick rejection. Stopped on all your shorts. Depends where you've got your stops. So my stops at the moment are 15% of ADR. So the defaults are 10% of ADR. But this is a rangy market at the moment. So I've got mine set to 15, which means it's harder to make money, but you stay in the trades longer if it's whippy. But, you know, like I always say, there's no right or wrong. You're stopped out, I'm still in. If that had clean broken like that today, you'd be making twice as much money, or you'd be making 50% more money on your breaks as I would. But you're going to stop out more. Always, the tighter the stop, the more often you're going to get stopped out. So as long as your stops are within the opening range. So I'm always, all testing I've done, I've only ever tested the stop within the range or matching the minimum range. Yeah, I mean, they all work in back testing. You know, the 15% wasn't as profitable as the 10% of ADR stop, but you know, you're going to get stopped out. It's a breakout strategy. Strike rate's 40%, so you're going to get stopped out 60% of the time. 6 out of 10 trades are going to lose. That's why you got to look at it. That is trend trading, breakout trading. That is it. That's the way it works. Mean reversion, much higher strike rates, but much smaller profits. Don't understand what you mean by the gap filled on the DAX. I have the prior close at 22242. Yeah, your broker might be different. My broker's gap filled. So that's the DAX gap fill for me. That is the high from that Friday. We gap down. Yeah, we're filled. If you're showing 22242, you're probably trading futures, which is different. This is CFDs. So, pound US dollar, 125 ADR. Trade your charts. My chart says it's filled. If your chart doesn't, you need to keep going long. No one's going to get the same information, are they? Well, you are if you're on the same brokers. If you're on Robo-Forex, your gap is filled. If you're not on Robo-Forex, I don't know. I'm not on your broker. If you're trading futures, obviously you have the advantage in futures of having centralized exchange. So you can see what everybody else sees. In CFDs, doesn't work like that. But, you know, the gap fills are also not to the pip. You know, the fact that this one has done that, yours may have already filled or not filled. But, you know, all gaps are there's a likelihood we're going to head that way. Exactly where we're going to get to, no idea. So, yeah. But, you know, this is why I always say trade your charts, not mine. Do your back testing, not mine, because data is different, which is why you robustness test and why you system parameter permutation test, because you need a variance in the strategies. If a strategy is a gap fill, you need to test it falling short of the gap fill by 10% and exceeding the gap fill by 10%. If all of those, i.e. targeting the gap fill, targeting 10% light, targeting 10% over, if they all produce profit, the gap fill strategy is robust. If only the falling short one works and that doesn't, it's not a robust strategy. This is what system parameter permutation testing is all about, is testing variance and stress testing all strategies. Yeah, same with this. If you go short above the 70 on the RSI, it also needs to work shorting 72, 74, 76, 68, 66, and 64. If all of those are profitable, you know that when the market's pushed up, it's a good time to mean revert it. Doesn't matter which number you pick, does it? As long as when it's pushed, it pulls. That's what we're testing with mean reversion. We're testing, does the market, after it's pushed, pull back with the indicator that I've chosen to measure movement. And you need to test different variations. You need to test also RSI 21 is the one that I'm going to use. If I'd used RSI 22 and 23 and RSI 20 and 19, would I still be profitable if I'd have used those? Because my readings on each broker might be off. So if I switch broker that gave me a reading on the 21 RSI and I got a similar reading on the 19 RSI on a different broker, would I still be profitable? If yes, brilliant, that's robust. If it's only the 20 and the 23 that produce profit, the 22, the 20 and the 19 didn't, that's not robust. Variances, never going to be the same. Everything is rough in trading. This is why people struggle and system hop, because you will test something, you will trade it, and then it doesn't work. And the reason it doesn't work is because it's different data. The market doesn't move the same every day. So You are talking about the 4:30 close on Friday's DAX. I'm talking about my broker's close on the DAX. My broker chart finishes at 22.50. So I don't know what that is in your, but my broker's chart is 22.50 last candle. If you're trading just the US stock markets, you shouldn't be doing that on the DAX because it's not a US stock market. The DAX doesn't shut at 4:30 on a Friday. Well, I mean, some trading may do, but trade your charts. I have tested everything on my broker's data with my broker's times. I'm trading what my broker supplies me. If you're only using 4:30 close on the DAX, you need to go and test everything on 4:30 close on the DAX. And that is what your data is going to be. So that is what you need to test on with your strategy. I don't know what your broker does. Mine closes at 10.50. So on my settings on the DAX, I have 22.30 as my session end. So that is when I close my trades out. But that isn't the last candle, because I'm not interested in highs and lows of candles. I'm not trading gaps. I'm not trading a gap strategy, so it doesn't matter, does it? If I was trading a gap strategy, I would have to use completely different data sets and verify different data sets for different things, wouldn't I? Look at the state of this. "45 minutes. Absolutely nowhere. Look. It's just untradeable chop. Talk about break the markets. Well, it depends on what strategy you're trading. It's broken this market for this strategy over the last couple of days, but give it another week. I really want him to say something really stupid. I mean, I'm quite surprised the market hasn't moved as much, because that was pretty damn stupid, wasn't it? Let's have Canada. But if he can say something that really makes it pop, we're going to start getting some serious breakouts, aren't we? But at the moment, we're in absolute stagnant mode because markets are too scared, aren't they? In the minute. There's a prime example on the FTSE today. Look. So that was the 10-minute ORB there. Look at that double top. Absolutely to the pip this morning on that double top. And there's your open there. Market came back, wicked through the open, closed below it, 3-bar reversal back up, wick through, and back up again. So, you know, that's literally, that was your trading range for hours. There's just no interest by market participants to be long or short at the minute. They just don't know what to do. So all you're going to get is rotation. It's almost worth waiting until he opens his mouth, isn't it? And just sort of take a week off. Wait for him to do something stupid. That is why I use the official closing price, which is supplied by the exchange. Yeah. So if you're trading futures, then you're going to be different. I'm not interested in exacts because the market's not exact. The market's random, so it doesn't make sense to use the exact price. Every now and again, I got somebody that used to come in the live rooms who was obsessed with the opening price and the closing price of the previous day, because he'd done a course where somebody told him that the previous day's closing price was the exact price to sell at. So he wanted me to build him an EA for all of this. And, you know, I can't really, because I don't trade in that way myself, but he wanted me to modify one of the EAs to try and use that exact closing price of candle. So I just showed him some visual examples of it. He was convinced that that was the place to sell at, and the strike rate was ridiculously high. I can't remember what it was, but it was stupid high. So we look back at some charts from months and years ago, and every time he gave me an example of, look, see, it did it. I would go, yeah, look, see, it just blew through it. Yeah, but it did it this time. Yeah, but it blew through it that time. We already ended up with a 50% strike rate. Doesn't matter where you take it, does it? Flip a coin, go long or short right now. You'll either be right or wrong. If you pick the price that it opened at, you'll be right or wrong. Today on the DAX, on the FTSE, if you'd have sold that high, you'd have gone, holy crap, look at that. The 10-minute range high is exactly where you want to sell it today. Show me another 10 days like that in the past, and I'll show you another 25 days where that hasn't happened. It's random. There was a large volume of orders came in, and there was a large sell order holding price back. They came back to it, and the person that sold that added more size. Everybody that went long trying to get a breakout today, when they got there, flipped short. Just market movement is market participants. Yes, there will be coincidences all the time because there are only a number of price points on here. So it makes sense that coincidentally it will get to the same price. And there are large orders sitting at previous turning points. We know that. That's what banks do. They can't execute all orders in one go. They have to split it into parts because there's not enough volume and liquidity to execute the entire size of their orders. So you are going to get this, which is why the market spends 80% of its time range bound, because it's just executing orders at price points, waiting for an imbalance in volume that it can use to move and make money with. And yesterday's close price is yesterday's close price. But yesterday's close price is caused by just the last volume of orders that comes in. There's a lot that happens between that close and the open the next day. And that is why gaps get filled, because the guys that were left offside there will want to fix the inefficiency and the imbalance in their books, which is why gaps tend to fill. Because they can move it there, because they have the power to do that. That's all it is. But it doesn't mean at that exact price point it's going to do that, because the imbalance between orders long and short at that point in time at 4:30, when you get back to that point in time, the imbalance of orders today is different, because I want to now buy the stocks at that price. Yesterday, I wanted to sell the stocks at that price. So we will just blow straight through it today. But if I still want to sell the stocks at that price, when we get back to that price and the inefficiencies are filled, they'll stop executing long orders and we can all short it. One of those two things is going to happen. And the probability is that. That's all you have. Random-ish. Random-ish. It's not random because it does work in that way. But that's a strategy, isn't it? Yeah, it's a really good strategy. The strategy is I'm going to take yesterday's close, and when we get to yesterday's close, if we've opened below it, I will sell it. If we've opened above it, I will buy it. That is a strategy. The strategy has a 50-50 chance of working out. Nothing wrong with that at all as a strategy, because it gives you a reason to press the button. That's all a strategy is. What happens after that is how you make money, isn't it? So when you work that strategy, you press the button, you press the short button because you open below it, we get back to it, and it works. You can add some size and manage the trade. If it doesn't work out, you stop out on the trade. And then you can decide, when we pushed up and it comes back to that price again, I will buy it again because I was the seller and it didn't work out. So the buyers overpowered me. So I'll now go buy. It's a strategy. It doesn't make any money. It just makes an entry. Pound US dollar has blasted through. So yours has blasted through 150% of ADR. Mine's not got to 150% of ADR yet. Mine's gone through 125% of ADR. Again, different broker, different data. So if you are trading 150 ADR reversals, you are in. I'm not. What's the difference? You're in, I'm not. Does it make the trade work or not? It's got nothing to do with it. Really good selling point. Good looking short. 5-minute reversal is miles away. 3-bar reversal going in as a 4-bar reversal, basically. So it's good for a short. I've already got a short on the pound New Zealand, so I wouldn't take that. But yeah, looks good. You're not going to get a reversal alert on that. 1 minute you will. But you won't get one on that move because it's so fast. Next reversal is down there. It's 150 ADR away. So this is strength coming in potentially on the US dollar suddenly. Little bit of strength starting to trickle in on the dollar. So pound US dollar starting to wane. Euro US dollar will be starting to come down as well. At the highs, look, reselling those highs. So again, if we're going to stay range bound, that's where you sell it. Tricky market, isn't it? At the minute, it's just up, down, but no direction. So if that's the case, that's the sell. Stocks still stuck. What can we do with today, eh? Nothing. So, yeah, just going to sit in these. I'll take a break long if it manages it, but not holding out much hope for today either, really. It's just an absolute chop fest at the minute. Might break short. 50-50 chance, isn't it? Right, I'll leave it there today. I'm back Wednesday for the member stream, Wednesday morning. I'm going to try and get the video done tomorrow, or videos done tomorrow. I might actually try and clip out what I've covered today because that would make a good sort of differences between video. Yeah, and then I'm going to get the new version of ORB pushed out. So all the old set files, you'll need to redo them, basically. They won't work. I might try and just watch some set files together for it. But unfortunately, I haven't done any back testing on the new version with the new loss recovery system. So you might find the results are different. You will find the results are different. But there shouldn't be that dramatically different. So best way to back test is actually not using the loss recovery system at all anyway. Just use standard lot sizes because that gives you an indication of actual strike rate. It's putting down again, look. So I'll try and get that done tomorrow, hopefully. If not, I'll try and get it out on Wednesday. But yeah, we're back on Wednesday morning and Wednesday afternoon for the next normal session. Hopefully this collapses now, look. Massive sell coming in. 1 minute left on the candle. All over the place, isn't it? So, yeah, we'll see how that goes. So there's a double top just gone in and a lower high on the US indices. So if we can break this area here, we've got half a chance. If we can close back down here, we've got half a chance of a flush today. So we'll see. But yeah, nice looking nice looking potential trades on the US dollar pairs. They are just stalling out again. So have a look at those potentially for shorts intraday. Lovely, well, 3-bar reversal, but it's actually 4. So you've got 2 pause candles in the middle instead of 1. But that candlestick there is definitely a rejection. So we'll see how far we come back down on that one, but looks good for short. Right, I will leave it there. Anything you need, let me know. I'll be back tomorrow. I'll be back on Wednesday. Other than that, have a good afternoon. Hopefully, if you are short, we flush. If not, who cares? So I will see you on Wednesday. Have a good day.